An all periods consolidation model, referred to simply as a consolidation model, contains a full integrated three-way financial model for each entity being consolidated, with the financial statements from each of these entity models then being aggregated into consolidated financial statements. This consolidation type is suitable for consolidating entities which are not tax or treasury consolidated. As a result, this analysis is done on an entity-specific level rather than on a consolidated basis. An all periods consolidation can be distinguished from an historical consolidation, as an historical consolidation aggregates the historical financial statements of multiple entities with eliminations if required before performing a single consolidated forecast. When looking at the structure of an all periods consolidation model, we can see that each entity contains its own independent three-way financial model, which is located within its own section. Currently, there are two entities within this consolidation model, Twisted Cereals and Mighty Mornings. Each entity has its own historical income statement and balance sheet, where accounting data is mapped in before we then forecast each area of the business as normal to create three-way financials for the entity. The financial statements from each entity then flow into the consolidated financials, where they are aggregated before intercompany eliminations are entered to create the consolidated financial statements. The consolidated financial statements are referred to as pro forma financial statements because they provide a hypothetical representation of multiple entities as a single entity. The entities within a consolidation model are managed by the entities summary in the appendices section, which lists the entities in the model and allows for their name and description to be entered. Entity names should be kept as short as possible, with other details and important notes included within the description. In a consolidation model, we can automatically add or delete entities via the Consolidation menu in the Modano tab if you're in user mode, or via the Console menu in the Build tab if you're in developer mode. This is demonstrated and discussed further in the Adding Entities and Deleting Entities videos. Taking a closer look at the information within a single entity. Looking at Twisted Cereals, we can see the historical income statement and balance sheet data for this entity, which has been imported and mapped using the Connect Model tool, as discussed in the Connecting Your Model video. This historical data is then used as the foundation for the entity forecasts, which are created by choosing our forecast drivers and entering assumptions. Just like in a single entity model, the forecasts start with revenue and expenses, and the Change Driver tool is used to select the most appropriate forecast drivers, as discussed in the Changing Drivers video. After populating the model forecasts for each entity, the end product is full three-way financial statements for that entity, ready to be aggregated within the consolidated financial statements. Our consolidated financial statements are located in a separate consolidated section of the financial model, which contains the consolidated income statement, balance sheet, and cash flow statement. Let's first look at the consolidated income statement. By default, the consolidation starter models use the totals aggregation method within the consolidated financial statements to reduce model size. This aggregation method brings in totals for each line item for each entity rather than bringing in all categories. We can change this aggregation method using the Change Driver tool, and the different aggregation methods are discussed in the Aggregation Methods video. Once the revenue expenses for each entity have been brought into the consolidated income statement, we can enter our income statement eliminations into the collapsed rows below NPAT to strip out any intercompany revenue and expenses. This process is discussed in detail in the Income Statement Eliminations video. After doing this, the consolidated income statement provides a pro forma group view of our entities, which then flow into the dashboards and reports in the model as usual. The same process is repeated to create the consolidated balance sheet, with our balance sheet eliminations being entered into the grouped net eliminations rows below the balance sheet. Finally, to round out our consolidated financial statements, let's look at our consolidated cash flow statement. Again, by default, we have total level information from the underlying entities being brought into the cash flow statement. As we have entered our income statement and balance sheet eliminations above and assigned an associated cash flow impact to each of these, our consolidated cash flow statement incorporates these impacts automatically, so we don't need to manually enter any cash flow statement eliminations. After finalising the consolidated financial statements, the end product is full three-way pro forma financial statements for the combined entities. These are then presented in the dashboards and reports within our model, which can be viewed within the model or by using the reports tools to generate high-resolution PDFs of these.